Welcome, ladies and gentlemen, to today's A&D Mortgage webinar. Today, we're going to be talking about bank statements. This is our monthly sales sales product webinar. So we look forward to talking today with Mikhail Veselowski. Sorry if I mangled your name there, friend, and Brendan Maloney from our underwriting team. So they're here to help us uncover everything that you guys need to know about mortgages that are related to bank statements. So very quickly, if you've got any questions, we ask you to go ahead and use the Q&A panel located down at the bottom of your screen. If you could turn off your cell phone so you can have their full attention, and then you can hopefully get some great content and start closing some bank statement loans by the time we're done. And then we will be sending out a recording of the video within the next 24 hours. So that's usually the first question that we get. So yes, you'll get a copy of this presentation and the recording. So with that, let me move over. For those people, I'll introduce our speakers really quickly and tell you a little bit about us. So our key speakers today are Mikhail Veselowski. He is one of our account executives on the West Coast, and he does quite a number of bank statement loans. So he is well experienced on the ins and outs. And if he doesn't know it, then his counterpart, Brendan Maloney, and our underwriting team do. So they are a dynamic duo when it comes to closing bank statement loans. So for those people who are new to us and are not already our broker partners, we're A&D Mortgage. We are one of the largest non-QM lenders in the market space, particularly dealing with the broker community. We also do quite a bit of conventional and government loans as well, and jumbo. But right now, most people know us for non-QM. We are partnered with a sister company called Imperial Fund, who help us securitize any loans that we originate and put them on the secondary market. And what that does is it enables us to be a little more flexible and to create our own underwriting guidelines and determine the amount of loan amounts, LTVs, and the level of risk that we want to do with the types of borrowers that we will seek out. We can kind of pass what makes us different. I think everybody knows that. In terms of where we are licensed, at this point, we're safe in saying we're nationwide. There's a couple of places where we don't have full licenses, particularly in the middle of the country. But in general, nationwide, and we did our license to do wholesale, retail, and correspondent. We also do service our own originated loans. And to point out particularly, if you do business purpose only loans, we are allowed to do those in 40 different states where you don't need to have a license. So with that, I'm going to turn it over to Mikhail and Brennan, and we're going to start talking about bank statement loans. So Mikhail, for those people who don't have a clue what a bank statement loan is, why don't you kind of tell us what it is?
I appreciate that, Carl. Hello, everybody. Mikhail Veselowski, A&D Mortgage. What is a bank statement loan? So bank statement loan would be like, it's actually a really good fit for self-employed borrowers that, don't traditionally or, possibly can't provide those docs that the conventional side can, right? Nice thing about that is that we don't have to too much worry about, like, no tax returns are needed, right? Which is it's nice because it removes the need to convert deductions and income flow, right? Or lack of reporting income from their, taxes. So that's also
that's a W-2 or a tax return.
Right. As far as that goes, is looking at this, as I mentioned earlier, it is a perfect fit for those self-employed borrowers. No traditional tax returns required. We offer both business and personal bank statements, right? And it covers wide ranges of income sources. So the 1099s and other, personal ventures.
Mm-hmm.
For this one, we're going to look at the self-employed borrower, right? Allows for borrowers who have had those bankruptcies, foreclosures, and short sales, seasonal contract workers. So let's say, for example, it allows borrowers basically, even from delivery drivers all the way to, real estate investors. So it has a really good range of things that we can present as long as their, statements are consistent.
So the mall
Program
Santa.
features,
So it's a good fit for the mall Santa.
well, you never know, right? It could be 1099 it. Um, uh, Basically, for our qualifying products, we have minimum FICO scores of 599 for super prime, right? We do go up to 90% CLTV. If your LTV, of course, if your FICO qualifies you up to that level. Again, business and personal bank statements are allowed, and you can also combine with other types, which is something I learned recently. We are able to do blended with your 1099s, right? Or your bank statement loans. So let's say spouse is W-2 and husband is bank statement, we could do that as well. We're going to go over some real quick bullets on the characteristics of what we offer qualifiers and limits, right? So loan amount up to 4 million, max cash in hand 1 million, no limit for those that are looking to go below 55 CLTV. Owner ox investments in second homes are allowed, 30-40 year fixed, and IOs. We also have ARM products if you're looking to do those. Based on the loan amount, we can do anywhere from, let's say, for example, if you're up to 1 million, you can do 3 months reserves, 1 to 2 million, 6 months reserves, and 2 million plus would be 12 months reserves. Gift funds for those reserves are allowed, and our requirement for those mortgage histories are on the super prime program. You have no lates by 30 by 12 and no lates by 90 by 24. Prime program does allow. That's why there's obviously a little bit different hit and interest rate, or I should say, rates for those prime products. Condos are up to 90% CLTV. Condo tells are up to 75, and we do allow like the 3-2-1-2-1 buy down programs.
Okay. So talking about a little bit about those bank statements, I know we've got, like you said, we can do personal and business. So let's kind of cover that a little bit.
Yeah. We're looking for stable deposits, right? Something that will be able to be consistent. Obviously, even though we are non-QM, we still need consistency for underwriters to make sure that we're staying within guidelines, I guess. Moving money from account to account will not basically count anything from typical outside the business scope, or if you're looking at non-business related transactions, deposits, right? Those don't qualify either. Yeah, basically that covers that part right there.
Okay.
Statements can be accepted, thrift accounts and such. Standard business expenses of ratios that are 50% will be applied on 99.9%. Otherwise, you would want to provide a CPA letter or third-party tax preparer specifying that your expenses are lower, right? But that's based off of what the underwriter says is fair for that business, correct? You can use up to 2 bank accounts per business, and qualifying income will be based upon what concierge, right? So you can have the concierge go through all your bank statements. They're going to give you their piece, and then the underwriter will say, hey, this is how it actually is when it gets all chopped up.
And for those people who don't know what the concierge is, we'll cover that in a little bit. Okay, great. That helps us on the business ownership requirements aspect. Sorry, for the
bank statements, right?
for the bank statements. Yeah.
For the business perspective, looking into the bank statement loans, 25%, right, of anybody on that grouping or the organization can go on the loan, right? So also the opposite works, where if 25% or I should say 24% and less from that operating agreement will not go on, they can choose to not go on the loan. Let me rephrase on that one. So as long as you provide the operating agreement that shows the breakdown of where your ownership is, you can choose who to put on and take off, right? 2-year history, business existence, and ownership history is required for eligibility. So that tells us that as long as you have that timeline, there are a lot of scenarios that we get that are 12 months and we need a little bit of this. We can always run exceptions if it's not within the standard guidelines, right? But as it states, 12 to 24 months is acceptable as long as you've worked in the same line of work, which is pretty much in line with Fannie's guidelines as well.
Okay. All right. Well, with that, let's jump over yeah, again, you get the two of you have closed tons of these loans, so I'm sure you got good tips that you can pass on to our brokers to help them do the same thing with us.
Yep. And so here's, kind of where I'll take over for a little bit. So Brendan Maloney, underwriting team lead here with A&D Mortgage. And so a lot of the files, Mikhail will go ahead, bring them in, you guys submit them, and then they get to our desk. And, we notice some files go super smooth Whereas other files, maybe they hit some speed bumps. So, one thing I love about this program is, the pricing and the flexibility. This is a pretty popular program and we have the capacity to reach a lot of borrowers with it. So, I love this program. It's great. And also, our underwriting team does a phenomenal job with it. However, there's some issues that do come up periodically. And I think with anything in life, the more proactive you can be with addressing these potential issues or concerns, you can save time. Maybe a particular file's not a good fit for A&D Mortgage, or maybe it is, but you just need to help communicate the story and help your underwriter understand what's going on. So we'll talk on the next slide a little bit about Concierge. It's a team that'll fill out the calculation for you. But with that said, I always encourage every LO. I come from the sales background myself. I encourage everyone to understand the income. So what does that look like? Review the deposits, understand if there's anything weird going on about them. If the borrower is making on average about $5,000 a month, but now there's all of a sudden this $150,000 deposit, you can guarantee that your underwriter is going to be wondering, hey, was that $150,000 deposit income? I've seen sometimes where it's someone who's maybe an Uber driver, and then 8 to 14 months ago, they sold a house and then they were trying to use that sale of that house as income. And that's a little bit outside the scope of what an Uber driver does. So now the income figure gets decreased, and then we run into qualification issues from a debt to income perspective. So things to watch out for, make sure you understand a general overview of the flow of the borrower's business as well, understanding the nature of the business. If a borrower is moving money from checking account to saving account or saving account to checking account, that's fine. The borrower can move their money around, but your underwriter is not going to treat that as income unless it's documented. I had a lawyer where there's the escrow account, and we don't typically use an escrow or IOLTA account for a lawyer for income or assets because those funds are protected. It's holding escrows for the lawyer's retainers and the lawyer's clients. But the way the lawyer got paid was he takes distributions out of that escrow account. So when I first got the file, I said, hey, I don't know what we're doing here or what the game plan is. And then the broker was able to further elaborate and further provide documentation, and everything worked out good. So make sure you understand how the business cash flow operates. And then another thing too is anytime your borrower gets hit with an overdraft fee or their account goes negative in balance, we classify that as, we just say, it's a NSF, a non-sufficient fund. And so our guidelines have a maximum of 3 NSFs within the last 12-month period. So if you have a borrower who maybe struggles with their cash flow management a little bit and they have a lot of NSFs, understand that that might make it ineligible for financing with A&D Mortgage. Now, with that said, a little bit about how we operate. Let's say the maximum is 3 NSFs, but you have a borrower where they had 7 insufficient funds, in the past year, but it's a strong borrower, right? They got good FICO, they're coming in with a strong down payment, things of that nature. They have a low debt to income ratio. We can always submit for exception and we can see, hey, can we get this exception approved? And we can deal with that on the front end of things instead of already having the submission going and running into issues down the line. So by getting the exception approved up front, potentially, that's super beneficial and it's going to go ahead and save everyone time. And then also, whether it's 12 or 24 months of bank statements, you can kind of look at the income trend. Is it consistent? Is it stable? Is there any seasonality involved? And I'll be touching on seasonality in a little bit. And then this is one too. It is written out. So all of this information is in our non-QM guidelines on our website. But one thing that I see oftentimes gets overlooked is that if we're using personal bank statements for qualification, anyone who is a borrower on those bank statements must, or an account holder rather, on the bank statements must be a borrower on the loan. Now, this is for personal bank statements. If the borrower is 25% or more of an owner of a business and we're using business bank statements, we do not need all owners of the business on the account. but instead it's for personal. So you'll see maybe there's a husband and a wife, and one of the spouses is on the loan and the other one is not. Maybe they have poor FICO or a lot of liabilities. We're going to require that other person be on the loan, and sometimes that can run into issues when we submit it,
Mhm.
initially expecting only one borrower. So those are some tips for success with the program based upon common issues that I have, seen from the underwriting perspective. Now, if we go on to the next slide, we can chat a little bit about Concierge. So one of my favorite parts, and feel free to go, Carl, if you have anything to
No,
mention.
I was just saying for those brokers who hate to do math, this is one of our greatest services.
Yeah, it's one of my favorite parts too. I love to do math. I'm a big nerd, but
We know.
certain types of math it takes a very long time. So I'm very grateful to have the concierge service. So part of our disclosures team, what they'll do is you go ahead, you send in your bank statements, and they'll actually go ahead. We have an Excel sheet and an Excel worksheet that we operate out of, and they'll punch in every deposit for 12 or 24 months. And then they'll go ahead and actually back out all of the transfers between accounts. And anything that looks like it might be a loan, right? If you take out a personal loan, that's not income. And then what they'll do, we started having them keep track of the non-sufficient funds as well. So at that point, you're going to be aware that, okay, we actually had 18 non-sufficient funds on this one. It might be a challenging one to go ahead and accomplish. So with that said, I love that they do this. And what's great is that this is completely free of charge for all of our broker partners, and you don't even actually require the loan to be submitted. So, we do this on the house for you. I think it's a wonderful service. And then it gives you a good estimate of what that income will be. Now, like I said, it's important for you to understand the nature of your borrower's business and income, because think of concierge as more of a data entry sort of item, and they do go ahead and think about the transactions and deposits to see if they make sense. But once it gets sent to your underwriter, that's when your income is truly going to get finalized. And unfortunately, there are times where there's discrepancies between the disclosures calculation and the underwriting calculation. So by understanding the flow of your borrower's cash flow, you can help reduce some of the discrepancies that you might experience between concierge and underwriting, because we want everything to flow smoothly once we get the loan in our hands, and we want to get you guys off to the races down to closing as quickly as possible. So with that said, I want to talk about a couple scenarios of what might be our ideal bank statement borrowers, or some borrowers who you might think this is a challenging person to reach, right? How are we going to do a loan for this individual? I feel that we have some good solutions for you guys. So in this example, we got a real estate agent, and she's got pretty good FICO. She's coming in with 25% down, and she is trying to do a cash out of her investment property. So she owns a few properties, and she also will go ahead and, sell properties for family, friends, and whatever clientele she gets. Now, she's not the biggest real estate agent ever, right? It's something that she does. She gets about, maybe 8 good deals, some years 6 deals, some years 12 deals. She'll get those throughout the year, and she'll get her commission checks dropped. Now, when we think of stable and consistent, a lot of times, traditionally speaking, you want to see every single month a deposit coming in. But with that said, one of my favorite parts when I came over to A&D on the operations side was that we're empowered to use common sense underwriting, right? So
Mhm.
we can see, okay, she's a real estate agent. She's getting 8 deposits throughout the year. For the most part, they're pretty consistent, but they're concentrated in the summer, maybe just a little bit
Mhm.
more. We'll say, yes, this makes sense. It's not like she needs to close on a home every single month in order for us to feel confident that she's a real estate agent. We can tell that she's licensed, and then we went ahead, and for this borrower, we were able to get her a decent amount of cash out proceeds. So then that way she could go ahead and continue building her own personal real estate empire, as you will. So Love being able to reach borrowers in situations like this because a lot of programs could be prohibitive, and
Mhm.
this is a wonderful thing. And so
Nick?
scenario number two, and this is one, I don't know about you guys, but I have a lot of friends. I'm in Michigan, so I got a lot of friends who will start up small businesses. And one of my favorite things about non-QM, just broadly speaking, is that I feel we're empowered to kind of help the little guy, right? The folks who would never qualify for traditional financing, we
Mhm.
get an opportunity to really reach them. And so this is a scenario where we'll call him Johnny Smith. And Johnny has a landscaping business. He's been doing it for about 5 or 6 years. He doesn't really like taking out car loans, one of those pay for cash, everything kind of guys. And so his FICO is 670, which not the worst, but still enough to make it such that he only has to put 20% down. We're doing a 24-month bank statement program, and he's buying a modest house here in the Midwest. And so his deposits, what's great is that they're super consistent. They're coming in, it's like every week he's depositing his money, and he's chatting with his LO and thinking, man, there's no way I'm going to get approved for a mortgage just because the tax returns, the way he files them, it's a little complicated, and he's tried before and been shot down. But then the LO may have realized that, okay, you have a business account, you've been doing this for 5 years, you have 24 months of super stable income. So let's go ahead and run it through the bank statement program. So it comes to us, we're going to look at it, and it's February right now. So we see that, all right, maybe he was making $8,000 a month in the middle of summer and everything. But now that it's February, the income is decreasing more so throughout December, January, February. He's been making maybe closer to like $1,500, $2,000 a month.
Mm.
So at first glance, this is a big stability issue, right? How are we going to be able to finance this borrower? Do we feel comfortable that his income is stable and consistent? Well, what's common in the Midwest is a lot of folks, they'll do their landscaping business in the summer, and then in the winter, they're going to do snow removal. So, unfortunately for Johnny, there really hasn't been that much snow in the winter, so the income has been sparse. But given that we have 24 months of bank statements, we can see the trend. It goes down, goes back up, goes down, and we feel comfortable assuming that it's just going to go right back up in the summer. A lot of people will lock in those contracts year over year. So again, it's a perfect example of how to reach those first-time home buyers who,
Mhm.
they're your hardworking folks. They're your roofers, your Uber drivers, your small business owners, your bakery owners. A lot of times they're just going to be disqualified from conventional financing, and we use this program to reach them. So I always love when a deal
Even
like
with a
this.
3% down program?
So with the 3% down program, I do not believe that we have that option available for the
No, right. Yeah,
non-QM.
yeah. But I mean, if they were looking at another lender, that this might be a better option.
Mhm.
I wanted to actually throw in there, Brendan, don't forget that also businesses like his take cash. So also when we're looking at cash deposits, it's not illogical to say that that's common, right? You got a restaurant owner, makes a lot of money in cash. It's a consistency thing. So I'm sure the underwriting team will be able to look into that and say that, hey, these cash deposits are consistent with the business and the borrower. So don't throw that out the window yet. A lot of LOs, processes are always asking, hey, there's not a lot of wire transfers, not a lot of check deposits. It's a cash deposit for this business or a cash deposit. It's not always, it's got to be consistent and look good to the underwriting team.
Yep.
Yeah, it's, if the borrower is hoarding $200,000 cash and they drop it in all at once, we're going to be digging into that and asking questions, and there might be qualification issues. But in Johnny's scenario here, if it's coming in every week or bi-weekly and it's a reasonable amount that makes sense,
Right.
your underwriter is just going to roll with it.
Right.
Great. All right. Well, that's the formal part of our presentation. So let's open it up for questions to the Q&A. I saw we answered one that looked like a loan scenario, or I don't know if that's one you want to bring up, Mikhail, if it's possible, that would be a benefit to everyone, but I
Yeah,
don't know,
this
'cause
wouldn't
it's
necessarily be
only
a
because it's a commercial property.
yeah, it's not going to be considered a bank statement because the client's asking about a mortgage on a commercial property that they want to live in, right? So
Mhm.
that's more of a mixed use thing, and you would do that on a DSCR program, not on a bank statement program.
Okay, great.
Yeah.
So, but not to say that we can't do other types of loans for
Of
people.
course,
So
yeah.
just making sure we hit upon that. So
Yeah.
let's go ahead and so folks, if you have got any questions, go ahead and throw them into the Q&A portion. And again, if you arrived late, let me answer the first question that's usually asked. Yes, you will receive a copy of this presentation and the recording. So we'll take care of that one.
We did get a question on DTI, right?
Mhm.
So we have limits, obviously. If you're maxing out your LTV or CLTV, it's going to be capped at 50. But depending on the parameters, if I'm not mistaken, maybe Brendan can help me on that one. I think it's at 80%, you can go up to 55. I have to look at the parameters, the lines, but if I'm not mistaken off the top of my head. So
Sounds right.
yeah, DTI
Yep.
should be capped at
And
55.
it does depend on FICO. So if you
Right.
want to go ahead and unlock 55% DTI,
700, right?
you need to have at least actually 680 FICO.
Oh, okay.
And then we do look at occupancy as well. So this is
Mhm.
for owner occupied only, I believe. If you're
Yeah, on a cash out,
and
you can't
second
do more.
home,
Yeah, on a
owner
cash out, you
occupied.
can't do more than 50. But on a primary, I think if I'm not, Brennan's right, you can go up to 55 only, not on
Yep. And it'll
investment.
be for those vacation homes as well for the snowbirds who are looking for a place in Florida.
The second homers,
Yep.
I don't know how many of those.
it's good.
Right. I still don't see any coming in, so maybe we've answered everything possible. So let's move on to the next couple of slides real quick, and then that'll give people some time to put together some questions if they have any. So if you haven't gathered yet from sort of what Brennan and Mikhail have been talking about in terms of how they work together, that's exactly how we like to work together with our broker partners. So we do look at ourselves as your partner for growth, and we do that really through what we kind of call it our 4 pillars, which is our streamlined loan process. So we try to make all of our underwriting and all of our processes as easy as possible on both you and the borrower so that we can get you to the closing very quickly. As you can tell, they're very well versed in the underwriting guidelines and have a very can-do attitude. So again, we're here to push you guys to the closing table as quickly as we can. And then when I mentioned the partnership between us and Imperial Fund, that kind of ties to the last two, which is we do have an extensive secondary marketing team who are constantly monitoring which way the winds of the mortgage industry are blowing, so that we can try to come up with either changes to existing products or add new ones to the mix. So we do have those flexible underwriting guidelines that all of this ties together so that we can help you guys, really push and expand your pipelines. One way that we do that is through some short-term sales promotions. We just launched one yesterday. It'll run until the end of the month. We're kind of gearing up for leap year, since it is a leap year. Sorry, leap day. So we're giving you this sort of once in a lifetime or once every 4-year opportunity. So we're doing a 37.5 basis point reduction on all the non-QM locks that come in for owner occupied with FICOs above 680, but the max loan amount will be $1.5 million. So it's somewhat tight on the guidelines. Yeah, so we're doing that. And then we like to support the brokers through continuous education opportunities. So we've got a couple of great webinars coming up in the next couple of weeks. In fact, one just after President's Day with Steve Kiles. He's with a group called Mortgage Marketing Animals. They're one of the leading partners that we work with in terms of doing mortgage marketing. So he's going to put together 7 tips that are going to be keys to help you close more loans in 2024. They're going to be pretty much low effort ones. So it's really about capturing those low hanging fruit so you can really push and get more business quickly, especially in this kind of rate sensitive environment still. And then the next one, we finally finished the formulation of it, but we're super excited on this one. So we initially were talking about doing a webinar on how to just look at the different generations that are out there. And as we were planning it, we've stumbled upon a really interesting relationship. So we are partnering with Rob Chrisman, who has the Chrisman blog that I'm going to presume most people know what that is. He's one of the most high profile people in the business. He's also done quite a few webinars with us. He is well respected. He is a boomer. And then he has a son, his name is Ravi, who has a podcast dedicated to working with millennials to get mortgages. And then we discovered a Gen Z influencer who does a lot of writing with Housing Wire, and works for a company called Active Comply that we actually partner with to monitor social media stuff. And her name's Ali Cardi. And then her mother is also involved in the industry. She's a lending expert over at Chase. So we're going to bring the two families together, kind of have a really fun roundtable discussion on, what it's like trying to work with borrowers of the different generations that they each work with. So we'll have a lot of interesting tips coming out, different ways of marketing, because you're going to market to a Gen Zer probably on TikTok, which you definitely wouldn't be doing it to a boomer for the most part. So little things like that. And then how to motivate borrowers and how to get around some of the inconsistency or the misconceptions that they might have. And then the last one that we've got, we do a monthly broker orientation for new partners, typically at the beginning of the month. So we'll be doing that on March 5th. So again, and then we also encourage people to go look at our blog. We've in the run up to this, we've posted up about 4 or 5 different blog posts on different aspects of working with bank statement loans. So we would encourage guys to always go look at the blog. And we'll send those helpful links to those articles along with the presentation as well. So, all right, with that, we've gotten a couple of questions come in. So how about an LOC for I'm assuming that's a letter of commitment for an investment property townhome in which has a tenant non-owner occupied?
Yeah, so for this, I think it might be referencing a
Maybe
line
it's
of credit.
LLC? Oh, okay. Yeah.
Um,
Line of
yeah,
credit. Okay,
so
thanks,
Right.
Robert. Thanks.
So what we do closed end second liens here. So we do not do open ended at this moment in time. So traditional HELOC is not something we accommodate, but instead we'll go ahead and do a closed term second. We typically will amortize it over 30 years, just a nice 30-year fixed on the deal. And we will, for an investment property, be able to accommodate that up to 75% CLTV. And then the maximum loan amount is going to be either 350 or 450, depending on FICO and LTV. For the investment program, for owner occupied second liens, we can actually go up to 85% CLTV, which is phenomenal. And then there'll be a 50% DTI cap on all of those. And we do the second lien program for, bank statements, full doc, DSCR. And it's great for this current market environment where interest rates are still super high. A lot of people are locked into their 2-3%, but they want to get some money to work on a little project around the house or whatever the case may be. This gives them a great opportunity to go ahead and access that equity.
Right. That seems to be, I think we got one more last minute.
Yeah, that's Robert.
Okay.
Saying
Oh,
thank
from
you.
Robert. Okay,
Yep,
thanks.
yep.
Okay. Yeah. So with
Yeah.
that,
And
I
then
think we can...
just to add, apologize, Carl, you can go up to 500K depending on your LTV for those owner occs, right? So depending on where you're
Oh, cool.
placing, right? It's anywhere from 50 to 500. Just depends on where you're placing, like you said, FICOs and LTVs. So,
Yep.
if you're cutting all the way max out 85, you'll get cut back to 350, 400, 450, depending on FICO. So there is a wide range, but let me know if you guys are interested in that. There's actually really hot program right now. I'm getting a lot of those. So second liens are popular right now.
I might be
Great.
your underwriter too.
There you go.
We might chat.
Yeah.
All right. And then if we don't have any more questions, so if you are interested in becoming a partner, we've got a couple quick, easy slides with QR codes. So you can just click that and it'll jump you over to the website. You can start filling out the broker package. And then we've got a quick little QR code for Mike, for Mikhail. So if you guys want to send him any questions that you didn't think of, or you want to talk to him about particular scenarios, absolutely, you can reach out to him. And again, with the email that we'll send you tomorrow, we'll have everybody's contact information, except I think we typically don't send out underwriter ones, so we'll leave Brennan alone. You can ask Mikhail, Brennan, any questions for Brennan.
We'll be lucky to have Brennan a part of the team, that's for sure. So
yeah,
hopefully we get that underwrite open up to Brennan. That's always a good partnership.
Yep. So with that, I think we can close out for the day. Thank you, gentlemen, for your time today, and thank you for everybody who came to hear what we had to say. There'll be a brief little 5-question survey at the end. If you guys wouldn't mind filling it out, let us know how we did. Give us any topic ideas of future webinars you'd like to hear us talk about. We'd be more than happy to get that feedback from you guys. So with that, I want to wish everybody a belated happy Valentine's Day and a happy early leap day. So be sure to take advantage of the little savings promo we got, and we'll hopefully see you guys at one of the next 2 webinars. So have a great day, everybody.
See you soon.
Yep. Thank you, guys.